Minnesota real estate math formulas. Question 1. A salesperson checks the arithmetic before explaining the transaction numbers to a client. A borrower's monthly principal minus interest payment is $2,206.67, annual property taxes are $8,072, and annual homeowner's insurance is $2,628. What is the approximate monthly pity payment? Option A, $3,098.34. Option B, $2,912.44. Option C, $2,540.64. Option D, $2,726.54. The correct answer is option A, $3,098.34. Pity combines monthly principal and interest with monthly equivalents of property taxes and insurance. Divide each annual escrow item by 12, then add those amounts to the stated principal minus interest payment. This calculation estimates the core monthly housing payment without adding charges not listed in the question. Question 2. During a transaction review, the parties need the following calculation to make an informed decision. A transaction generates $36,994.22 in brokerage commission. Under an internal compensation arrangement, a salesperson is credited with 52% of that amount before other deductions. What amount is credited to the salesperson? Option A, $22,699.65. Option B, $15,774.34. Option C, $19,237. Option D, $20,391.22. The correct answer is option C, $19,237. The internal split is applied to the stated brokerage commission by multiplying the commission by the salesperson's percentage. Converting the percentage to decimal form produces the credited amount. Licensing rules about how compensation is paid remain separate from the arithmetic of the internal split. Question 3. Two examples appear on a practice exam. Example 1 is, an investigation establishes a serious licensing minus law violation and the candidate is asked which regulator has statutory enforcement power. Example 2 is, a consumer receives transaction assistance but has not hired the brokerage to act as the consumer's agent. Which labels fit the examples in that order? Option A, Situation 1, salesperson compensation through the broker. Situation 2, facilitator relationship. Option B, Situation 1, Commissioner disciplinary authority. Situation 2, buyer representation agreement before representation. Option C, Situation 1, facilitator relationship. Situation 2, Commissioner disciplinary authority. Option D, Situation 1, Commissioner disciplinary authority. Situation 2, facilitator relationship. The correct answer is option D, Situation 1, Commissioner disciplinary authority. Situation 2, facilitator relationship. The first situation is governed by this idea. The Minnesota Commissioner may use licensing remedies and civil penalties for violations within statutory authority, including a civil penalty of up to $10,000 per violation under current law. The second involves a different rule. A Minnesota licensee may assist parties as a non-agent facilitator when no representation agreement creates an agency relationship, subject to statutory duties. Treating the two fact patterns as interchangeable would miss the legal or practical distinction being tested. Stressed about your real estate exam? We can take real estate exam for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 4. During a transaction review, the parties need the following calculation to make an informed decision. A tract contains 87,343 square feet. Approximately how many acres does it contain, using 43,560 square feet per acre? Option A, 2.01 acres. Option B, 2.31 acres. Option C, 2.46 acres. Option D, 2.16 acres. The correct answer is option A, 2.01 acres. Acreage is found by dividing total square feet by 43,560. Applying that conversion to the stated tract area produces the approximate number of acres. Multiplying instead of dividing is a common unit minus conversion error. Question 5. A salesperson checks the arithmetic before explaining the transaction numbers to a client. Comparable small rental properties support a gross rent multiplier of 110. If the subject's monthly gross rent is $3,140, what value is indicated using the same multiplier? Option A, $407,572. Option B, $386,848. Option C, $345,400. Option D, $303,952. The correct answer is option C, $345,400. A gross rent multiplier is applied by multiplying the subject's gross rent by the market minus derived multiplier. Using the monthly rent that matches the multiplier's basis produces the indicated value. This shortcut does not deduct operating expenses the way an NOI capitalization analysis does. Question 6. Before an offer is written, a buyer reviews the financial effect of the stated figures. Assume a Minnesota deed is taxable at the general state rate of 0.33% and the net consideration is $345,219, with no exemption or special county rate involved. What is the state deed tax? Option A, $1,207.58. Option B, $1,002.52. Option C, $934.16. Option D, $1,139.22. The correct answer is option D, $1,139.22. The general state deed minus tax calculation in this problem uses 0.33% of net consideration. Converting 0.33% to 0.0033 and multiplying by the stated consideration gives the tax. The question expressly excludes exemptions and local variations, so only the stated state rate is applied. Question 7. During post-minus contract review for a vacant residential parcel, which statement best describes real estate education, research, and recovery fund? Option A, Minnesota licensees must provide parties with copies of transaction documents they sign or that affect their agreement as required by law and professional practice. Option B, Minnesota licensees are required to submit written offers to the appropriate party promptly rather than withholding them for strategic convenience. Option C, Minnesota maintains a statutory fund connected with real estate licensing that supports authorized education, research, and recovery purposes and is funded in part through license fees. Option D, Minnesota real estate advertising must clearly and conspicuously identify the licensed brokerage name as required by statute. The correct answer is option C. Minnesota maintains a statutory fund connected with real estate licensing that supports authorized education, research, and recovery purposes and is funded in part through license fees. A practical application appears in this fact pattern. A licensing question asks about the state fund designed to provide specified recovery and education minus related functions. Those facts demonstrate the defining feature of the concept in an actual transaction. Ordinary brokerage trust accounts hold transaction funds for clients and customers rather than financing the state recovery program. Question 8. An investor compares a property opportunity using the figures supplied in the scenario. A $577,319 loan carries 1.5 discount points and a 1.5% origination fee, both calculated on the loan amount. What is the combined amount of these two charges? Option A, $16,280.40. Option B, $14,202.05. Option C, $15,241.23. Option D, $17,319.57. The correct answer is option D, $17,319.57. Both charges are percentages of the same loan principal, so each percentage can be calculated separately and then added. Adding the point percentage to the origination minus fee percentage before multiplying produces the same combined charge. The calculation excludes unrelated closing costs because they are not stated in the problem. Are you looking for real estate exam actual questions? Visit our website pokerexams.com to access real estate exam study guide with actual questions and answers. Scan the QR code or click the link in the description to get real estate exam answer key today. Question 9. As part of a closing estimate, a broker verifies the calculation independently. Annual property taxes are $2,048. Using a 365-day year, what is the tax amount attributable to 298 days, rounded to the nearest cent? Option A, $1,672.07. Option B, $1,872.71. Option C, $1,471.42. Option D, $1,371.09. The correct answer is option A, $1,672.07. Daily tax is found by dividing the annual tax by 365 under the convention stated in the question. Multiplying that daily amount by 298 days produces the proration. Whether the amount is ultimately a buyer credit or seller debit depends on the contract and whether taxes are paid in advance or arrears, which this question does not ask. Question 10. During a listing consultation, a licensee prepares a calculation for a seller. A borrower obtains a $480,559 mortgage and pays 2.5 discount points. How much will the discount points cost if 1 point equals 1% of the loan amount? Option A, $12,013.99. Option B, $14,176.50. Option C, $9,851.47. Option D, $13,455.66. The correct answer is option A, $12,013.99. 1 discount point equals 1% of the loan amount, so the number of points is converted to a percentage and multiplied by principal. Applying 2.5 points to the stated mortgage produces the upfront point charge. Points are based on the loan amount rather than the property's total sales price. Question 11. Which statement best distinguishes variance from home inspection contingency? Option A. First, government may regulate land use to protect public health, safety, morals, and general welfare. Second, government can acquire private property for a public use when constitutional and statutory requirements, including compensation, are satisfied. Option B. First, a purchase agreement may condition the buyer's obligations on inspection rights and the results within stated time limits. Second, an authorized exception can provide relief from strict zoning dimensional requirements when the legal standard for relief is met. Option C. First, an authorized exception can provide relief from strict zoning dimensional requirements when the legal standard for relief is met. Second, a purchase agreement may condition the buyer's obligations on inspection rights and the results within stated time limits. Option D. First, government can acquire private property for a public use when constitutional and statutory requirements, including compensation, are satisfied. Second, government may regulate land use to protect public health, safety, morals, and general welfare. The correct answer is option C. First, an authorized exception can provide relief from strict zoning dimensional requirements when the legal standard for relief is met. Second, a purchase agreement may condition the buyer's obligations on inspection rights and the results within stated time limits. One practical example of the first concept is this: a narrow lot creates a qualifying hardship involving a setback requirement, and the owner seeks limited relief. A practical example of the second is this: a buyer wants the right to evaluate the roof, foundation, and mechanical systems after acceptance. The different facts show why the two concepts should not be used as synonyms. Question 12. For a single-family home issue arising during offer preparation, which explanation of obedience is most appropriate? Option A. Each party exchanges a promise, so a promise is given in return for another promise. Option B. The parties or a legal remedy may unwind a contract and restore them, as nearly as possible, to their pre-contract positions. Option C. Agency can end through events such as completion, expiration, mutual agreement, revocation where permitted, death, incapacity, or operation of law. Option D. An agent should follow the client's lawful instructions while refusing directions that would require illegal conduct. The correct answer is option D. An agent should follow the client's lawful instructions while refusing directions that would require illegal conduct. The transaction example is this: a seller directs the listing agent to advertise a lawful price reduction but later asks the agent to discriminate against a protected buyer. That application reveals the distinction the exam is testing without relying on memorized wording alone. Loyalty does not require following an unlawful instruction. Question 13. During a transaction review, the parties need the following calculation to make an informed decision. A property previously worth $347,692 experiences a 12% decline in market value. What is its approximate value after the decline? Option A, $324,327.10. Option B, $342,685.24. Option C, $305,968.96. Option D, $269,252.68. The correct answer is option C, $305,968.96. A percentage decline is subtracted from 100% to find the remaining value percentage. Multiplying the original value by that remaining percentage gives the new value. This is a market minus value change calculation, not appraisal depreciation by age alone. Question 14. During a listing consultation, a licensee prepares a calculation for a seller. An owner's property is worth $761,717 and the outstanding mortgage balance is $495,116. Ignoring other liens, how much equity does the owner have? Option A, $282,597.01. Option B, $266,600.95. Option C, $298,593.06. Option D, $234,608.84. The correct answer is option B, $266,600.95. Equity is the owner's value interest after subtracting debt secured by the property from the property's current value. Deducting the stated mortgage balance from the stated value gives the owner's equity under the problem assumptions. Equity can change when either market value or the loan balance changes. Question 15. A candidate wants a small apartment property example of liquidated damages. Which fact pattern is the best match? Option A. All parties agree that a new buyer will replace the original buyer and the original buyer will have no further contractual liability. Option B. A purchase agreement states how earnest money will be treated if the buyer defaults under defined circumstances. Option C. Two parties purportedly agree to a transaction whose object is unlawful. Option D. A transaction raises concern because one signer is a minor who lacks full contractual capacity. The correct answer is option B. A purchase agreement states how earnest money will be treated if the buyer defaults under defined circumstances. The parties may agree in advance to a reasonable amount or method for damages if a specified breach occurs, subject to enforceability rules. Applying that rule to the transaction explains why the described classification or response fits. Punitive damages are intended to punish rather than estimate contractual loss. Question 16. An investor compares a property opportunity using the figures supplied in the scenario. A buyer agrees to pay $789,223 and makes a 22% down payment. Ignoring finance closing costs, what principal loan amount is needed for the remainder of the price? Option A, $615,593.94. Option B, $578,658.30. Option C, $726,400.85. Option D, $504,787.03. The correct answer is option A, $615,593.94. The loan finances the part of the purchase price not covered by the down payment. Subtracting the down minus payment percentage from 100% gives the finance percentage, which is then multiplied by price. The calculation excludes closing costs because the problem states that they are not financed. Question 17. During a transaction review, the parties need the following calculation to make an informed decision. A commercial lot has 170 feet of street frontage and is valued at $584 per front foot. What value is indicated by the front minus foot method? Option A, $105,236.80. Option B, $99,280. Option C, $93,323.20. Option D, $111,193.60. The correct answer is option B, $99,280. The front minus foot method multiplies the number of frontage feet by the value per front foot. Applying the stated unit price to the parcel's frontage gives the indicated amount. Parcel depth matters only if the problem supplies an adjustment for it. Question 18. An investor compares a property opportunity using the figures supplied in the scenario. An investor contributes $132,419 of cash and expects $5,531 of annual before minus tax cash flow. What is the cash minus on minus cash return, rounded to two decimal places? Option A, 3.43%. Option B, 4.18%. Option C, 4.93%. Option D, 5.3%. The correct answer is option B, 4.18%. Cash minus on minus cash return compares annual before minus tax cash flow with the investor's actual cash invested. Divide the annual cash flow by the cash investment and convert the result to a percentage. This measure differs from capitalization rate because it considers the investor's cash position rather than total property value. Stressed about your real estate exam? We can take real estate exam for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 19. A licensee encounters this situation. An investor pays separate consideration to keep the right to purchase a parcel open for 60 days. Which concept should the licensee recognize? Option A, specific performance. Option B, statute of frauds. Option C, listing agreement. Option D, option contract. The correct answer is option D, option contract. The governing rule can be summarized this way: one party receives the right, but not the obligation, to buy or lease property on stated terms during a specified period. That rule controls the issue raised by the facts. A purchase agreement generally obligates both parties once it becomes binding. Question 20. As part of a closing estimate, a broker verifies the calculation independently. A seller wants to net $127,045 after paying off a $194,345 loan, $7,195 of other costs, and a 6.5% commission based on the sales price. What approximate sales price is required? Option A, $309,256.47. Option B, $351,427.81. Option C, $393,599.14. Option D, $372,513.48. The correct answer is option B, $351,427.81. When commission is a percentage of the unknown sales price, the desired net plus fixed costs must be divided by 1 minus the commission rate. This rearranges the seller minus net equation instead of subtracting commission before the price is known. The result is the approximate price needed to cover the percentage commission and all stated fixed deductions. Question 21. For a single minus family home issue arising during negotiation, which explanation of statutory contract minus for minus deed cancellation is most appropriate? Option A, title history is traced through recorded instruments summarized in an abstract or examined through land records instead of being registered under the Torrens certificate system. Option B, Minnesota allows mortgage foreclosure through a judicial lawsuit under Chapter 581. Option C, Minnesota generally requires both spouses to join in a conveyance of homestead real estate, subject to statutory exceptions. Option D, Minnesota provides a specific statutory process for a seller to cancel a contract for deed after buyer default rather than treating the arrangement exactly like a mortgage foreclosure. The correct answer is option D. Minnesota provides a specific statutory process for a seller to cancel a contract for deed after buyer default rather than treating the arrangement exactly like a mortgage foreclosure. The transaction example is this: a contract minus for minus deed purchaser defaults and the seller wants to terminate the buyer's contractual rights under Chapter 559. That application reveals the distinction the exam is testing without relying on memorized wording alone. Mortgage foreclosure uses different statutory procedures because the security and title structure differs. Question 22. Which financing scenario most clearly demonstrates Minnesota subsurface sewage treatment disclosure in a single minus family home transaction? Option A. A buyer is purchasing a condominium unit in a community governed by recorded common minus interest documents and an owners association. Option B. A seller knows an old well exists on the residential parcel and is preparing the purchase agreement. Option C. A rural home uses a private septic system and the seller is preparing to enter a purchase agreement. Option D. A property manager faces a residential possession dispute and needs to identify the Minnesota statutory framework rather than relying only on a lease clause. The correct answer is option C. A rural home uses a private septic system and the seller is preparing to enter a purchase agreement. The governing rule can be summarized this way: Minnesota law requires specified disclosure about an individual sewage treatment system or known sewage system status before the buyer becomes obligated, when the statute applies. That rule controls the issue raised by the facts. A municipal sewer connection is a different utility situation and does not erase disclosure duties when a private system is present. Question 23. A salesperson checks the arithmetic before explaining the transaction numbers to a client. A rectangular parcel measures 316 feet by 208 feet. How many square feet does it contain? Option A, 57,841 square feet. Option B, 53,897 square feet. Option C, 69,672 square feet. Option D, 65,728 square feet. The correct answer is option D, 65,728 square feet. Area of a rectangle equals length multiplied by width. Multiplying the two stated dimensions gives the parcel's square footage. No acre conversion is needed because the question asks for square feet. Question 24. A student must classify two transaction issues. The first is, a salesperson knows of recurring basement flooding that materially affects use and is not apparent during a showing. The second is, a transaction collapses and buyer and seller give conflicting oral demands for the same earnest money. Which classification is accurate? Option A, Situation 1, Minnesota material minus fact disclosure, Situation 2, authorized trust minus account disbursement. Option B, Situation 1, Minnesota material minus fact disclosure, Situation 2, Torrens registered property. Option C, Situation 1, authorized trust minus account disbursement, Situation 2, Minnesota material minus fact disclosure. Option D, Situation 1, Minnesota subsurface sewage treatment disclosure, Situation 2, authorized trust minus account disbursement. The correct answer is Option A, Situation 1, Minnesota material minus fact disclosure, Situation 2, authorized trust minus account disbursement. The first situation is governed by this idea: Minnesota licensees must disclose known material facts that could adversely and significantly affect an ordinary purchaser's use or enjoyment of the property, subject to statutory exceptions. The second involves a different rule: Minnesota trust money is disbursed only under authorized circumstances such as closing, written agreement of the parties, qualifying statutory affidavit procedures, or court order. Treating the two fact patterns as interchangeable would miss the legal or practical distinction being tested. Question 25. Which explanation correctly separates consideration and liquidated damages? Option A. First, the parties may agree in advance to a reasonable amount or method for damages if a specified breach occurs, subject to enforceability rules. Second, a contract generally requires a bargained minus for exchange of something of legal value. Option B. First, a contract generally requires a bargained minus for exchange of something of legal value. Second, the parties may agree in advance to a reasonable amount or method for damages if a specified breach occurs, subject to enforceability rules. Option C. First, an agent must place the client's interests above the agent's own conflicting interests within lawful bounds. Second, a party agrees to the offered terms in the manner required before the offer expires or is revoked, producing mutual assent when other contract elements are present. Option D. First, a party agrees to the offered terms in the manner required before the offer expires or is revoked, producing mutual assent when other contract elements are present. Second, an agent must place the client's interests above the agent's own conflicting interests within lawful bounds. The correct answer is Option B. First, a contract generally requires a bargained minus for exchange of something of legal value. Second, the parties may agree in advance to a reasonable amount or method for damages if a specified breach occurs, subject to enforceability rules. One practical example of the first concept is this: a purchase agreement involves a promise to transfer title in exchange for the buyer's promise to pay the agreed price. A practical example of the second is this: a purchase agreement states how earnest money will be treated if the buyer defaults under defined circumstances. The different facts show why the two concepts should not be used as synonyms.